Three most important things that you should look for if you want to make a property investment. At the end of each year, I start to think about the coming year. I start to put into plans. I don't want to be that type of person that's doing their New Year's resolution too late. I like to start the new year already ready. And when it comes to property investing, there are three things that I've learned over the past 10 years, working with a lot of clients, working on a lot of projects, and investing myself. And the single most important thing to start off with, point number one, is that you'll hear a lot of people say that you should invest in land, or you should invest in the right area or the right product or whatever. Everyone's got their own philosophy, but it all boils down to this. It all boils down to scarcity. Real estate is a network asset. The bigger the network, the more valuable the real estate. That's why real estate closer to financial hubs tends to be more expensive, and real estate in regional areas where the network is smaller tends to be cheaper. So rarity and scarcity is really, really important. Whatever it is that you're looking to buy, whatever that you can afford, try to find something that has a level of scarcity. Now, obviously, land is one of the most scarce and rare things that we have in metro cities. But if you can't afford to buy land and you are looking at an apartment, for example, look for something unique. Look for something that has character. Look for something that stands out from other things and increases the future demand. That's point number one. Point number two is cash flow. It's not just the cash that you're generating from the asset today, but think about the future cash flow. And what I like to look at is income growth. A lot of people might say a 6 or a 7% yield property, but if that property is going to stay at the same rent for the next 10 years, that's not necessarily attractive. Sometimes I'd rather go and buy something at a 3 or a 4% yield if that yield can double over time. You think about an apartment in Bondi or any coastal area along the east coast of Australia close to a metro city. Rents have exploded. And so you may have bought it on a 3 or a 4% yield, but if you held it for 10 or 15 years, that yield today is actually maybe over 10%. So income growth, very, very important. A lot of people miss it. A lot of people don't think about it, but income growth is super, super important, thinking about the long term, not just about today. The third and most important point, I believe, is to invest within your means. Don't overstretch yourself. Figure out who you are, figure out what your budget is, figure out your goals and aspirations, and give yourself time. Give yourself time, give yourself a plan, do things over a period of time. You're more likely to achieve, less likely to stress out. Good luck in 24.